Jefferies initiates coverage on WeWork with a buy rating and a target price of sub 800 rupees per share, expecting a 22% revenue compounding till FY28. The stock surges nearly 4.5%.
GMR Airports is also up close to around 4% following a bullish note coming from Jefferies. The brokerage has a buy rating on the stock and raised the target price to 115 a share, expecting a recovery in the second half of FY26.
Keynes Tech slips 5% following a largely in-line second quarter, although revenue missed estimates. The management tells CNBC-TV18 that margin improvement is likely to sustain and will be maintained around 16% in FY26.
NQ Pharma slumps close to around 4% after around 2.5% equity change hands in two large trades, with Bain Capital likely to be the seller.
Online education platform Physicswala makes a stellar debut on D Street, extending its post-listing gains to over 40% from its issue price, currently holding around a 34% gain from its issue price.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see on the screen, well, a lot of stocks are actually in the red. At the top of our heads as well, you can see that, in fact, both the Nifty and Nifty Bank, the mid-cap index, all of them trading in the red. And the breadth of the market is negative. But to be fair, the Nifty Bank is still doing a relative outperformance. And to be fair, Mangalam, if you look at the remainder of Asia, well, we're not doing so badly. Though we're down close to 0.5%, the remainder of Asia is down 1.5% or even more.
Down but not out, and we put behind us a decent rally as well. Yesterday, after a very long time, we closed above that 26,000 mark as well. And where we are as well, is an important support zone. The only thing that I'll be watching out for as we move towards the end of trade would be any sort of volatility that would accrue on account of the weekly options expiry. And secondly, usually when the markets were, lower, we didn't see a big impact on the India VIX. But right now, as we speak, the India VIX has moved to the high point of trade. So those are a couple of factors that we will monitor as we go along. But no real problems. The Nifty Bank has been outperforming. And at the same time, we will watch for any sort of recovery, if at all it would come by, on the other two heavyweights, which is the IT index as well as Reliance. So we'll watch out for that. Currently at the lower level of today's trading session. But let's talk about one stock which is doing extremely well in an otherwise wobbly market. And that is the debutant. We have EdTech firm Physicswala making its D Street debut today, listed at 145 rupees versus its issue price of 109. And that implies a good 30-35% premium versus its opening as well. While the issue opened, we spoke with Prateek Maheshwari, who's the co-founder and whole-time director. Now, post-listing, he joins us once again. Prateek, thank you so much for joining in. Congratulations on this listing for your company, for the dream that all the owners had and all the employees had as well. It's fairly good, and I hope that this translates into better service and overall better education for all the millions of students that you have as well. And that truly will be the biggest achievement of a company like Physicswala in its vision. But be that as it may, now that you've listed, now that the street has rewarded you with this sort of premium and promise as well, could you give us a sense on what a sustainable growth path for the company would be from here on? And at the same time, what's the kind of profitability that you're looking at in a couple of quarters from here, as you promised last time?
Yeah. So, thank you so much, for inviting me. And good outcome, as a listing process. We are we are a very young company, as well as improving top line and bottom line at a very rapid rate, and very soon, as I told last time also, we have a path to profitability. The listing is the valuation, the listing, the share price is just a number. What is more important is 98% of the India doesn't have access of a good quality education, and we are on a mission. And that mission is more important, that access is more important, there will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So, so continue to make impact in the student's life, as well as, we will be utmost responsible, to create our shareholder value as well.
All right. Hi, Prateek. Good morning. First of all, congratulations on that big listing. Good to see you, family, friends, well-wishers, all of you all giving that bell a good ring. So good on that. And you've built a very, very good business. But as you said, you're playing a very, very important role in India's education system. However, now you're also playing a very important role in shareholders' wealth as well, which is extremely crucial. So, we understand that there's a big potential for penetration. You're building the base for various children, students for tomorrow. Excellent work out there. Tell us the path to profitability. Which year will you turn profitable? And the endeavor is to continue growing. What is the growth rate we should work with? Just two numbers. One is revenue growth, a broad band. And which year do you turn profitable? That's it.
So the path to PAT level profitability will achieved in less than 12 months from now, as well as what is more important is we want to capture Southern India. We want to win in 11 different Indic languages, as well as we will continue to expand into multiple exam categories. Shareholder value creation is we take it with utmost responsibility. This is the same middle class India, via mutual fund have invested in us, as well as good retail participation as well. We are taking care of their kids, and we will make sure that their investments lie in safe hands and in turn to be a great returns for them.
All right, we understand that path to profitability less than 12 months from now. That would be the headline. Revenue growth rate is something that you haven't spoken about. Can you once again, iterate the kind of growth rate that you will post on your revenue? And how much of that, again, if you could clarify, come from offline centers, how much of that would come from online? A broad revenue growth band and growth rate for both offline and online.
So current revenue mix, 52% revenue comes from our online business and 48% revenue comes from our offline business. In upcoming years, we will have a little bit more skewed revenue towards online, but revenue mix will remain near same, 55, 45 in couple of years. As well as both are growing at a very healthy rate. If you see my FY24 to 25, improvement in revenues was more than 40%, and we will continue to grow, more than 30% in upcoming years.
All right, more than 20% upcoming years would be your revenue growth. That would be organic.
More than 30. Yeah, more than, that is completely organic.
All right, but
more than
around 30%, more than 30% is something that the street would like as well, especially because, you were offered at 10 times sales. So maybe to justify that sort of multiple path to profitability and revenue growth were extremely important. And I'm glad that you've clarified on that as well. But what we also needed to understand is, in a business like yours, there is a fair amount of teacher attrition. And in your business in particular, it's nearly 35% or thereabouts. How do you curtail that, and how do you ensure that, this is something that is managed well? Because 35% teacher attrition implies a third of your overall strength is actually churned every year.
So that number, is have reduced drastically. See, in FY24 and FY25, we were in a hyper expansion mode, and we hired a lot of lateral faculties at that point of time. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms. And what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where where 3 to 6 months there is an intense training program crafted by Alag is actually solving this problem completely. But you will see a sharp dip in this number this year.
All right. What would that number be?
What would the number be? The attrition number? Attrition number, what will it be? And more inorganic growth is what?
That number is not handy with me.
Okay.
No. There are a lot of headroom to expand in domestic market, and no as such big plans for inorganic expansion.
All right. Just one final question before we let you go, and this one's on attrition as well. You said that you had to let go of a lot of non-performing teachers, but typically what happens in a business like yours as well, where there are extremely high-performing teachers, when they go, they take along with them students also. Non-performing teachers going, good for business, but good-performing teachers going, not so good for business. So if you could give us a sense on how much of that happens in a business like yours as well?
Yeah. So just to clarify the last question, the teacher attrition was very heavy in in our offline mode of learning, and which we have controlled completely. Our online teacher attrition is less than 5% historically. Teacher moving out and taking out students with them, it's not doesn't applicable to us. It happened in the past also. If you see, our competitor had $1 billion of cash, but this is a very unique business model which is born out of community. If your science results are unbiased of any science topic, if you put laws of motion or thermodynamics in your Google search, in your YouTube search, out of 10, 5 videos will be physics walas, So this is a very unique community-led model which we have created. The community which Alag had built in 2020 with 30 lakh students now have grown to 12 crore students across 250 YouTube channels. So nobody can take away that community from us. So that gives us a great moat and a great entry barrier for us. As well as there is economy of scale. We have built amazing tech stack where thousands of students studies in a live classroom, with the AI-led doubt solving.
Got it. Pratik, thank you so much for joining in and explaining your business to us. Today is a day for you to celebrate. Today is a day for you to be a lot more thankful and obviously mindful about the future. Bunk classes today and party today?
Yeah, you can bunk for the remaining of the day, Pratik, and just celebrate with you and family. Congratulations. We look forward to more such interactions. We'll push you a little bit for numbers because now you have to answer even to the shareholders and at times communicate via us. Thanks a lot for joining in.
And Nigel, he was talking about the laws of science, the laws of motion, etc. One law that everyone will be watching out for is the law of gravity as well, because when the valuations go up and the performance does not come by, then there is law of gravity that applies. And when it doesn't, then there is that velocity that applies to the share market as well. So that's some physics from a stock market standpoint. But with that, we'll take a short break, come back on the other side. We have another D-Street debutant waiting in. MV Photovoltaic Power joins us. Stay with us. Hello and welcome. You're watching us back here on Chartbusters, and alongside Physics Wala, the other company that listed was MV Photovoltaic. Saw a subdued debut on D Street, listing with minor losses. Suhas Donti, who's the whole-time director and president, as well as CEO of the company, now joins us. Thanks a lot, Suhas, for joining in. The nature of the markets, right? Sometimes up, sometimes down. Welcome to the secondary markets. The obvious question from where we are standing right now, you have a capex plan of close to 5,500 crore rupees, of which funding is secured as well, 3,300 crores from Iroida. That's what you had told us last time when you joined in. The question is, what is the kind of asset turns that you're expecting on this 5,500 crore capex? When does all of this get completed? And what would your peak revenue potential look like?
Thank you very much, sir, for having us on this show, and we are very happy to be listed on the stock exchange. And we thank the regulators and the exchanges. So, as you know, we are the second largest solar manufacturer, integrated manufacturer with cell and module manufacturing capability. And for our expansion of 6 gigawatt of cell and module manufacturing, taking us to 16.3 gigawatt of capacity of modules and 8.9 gigawatt of capacity of cell. The project cost, as you said, is a 5,500 crore project, where 3,300 crore is the debt that we have secured from IREDA. And this project is going to be commissioned in the next 18 months, and timing it well for our, for the India's growth of solar.
All right. Hi, Suhas. Good to see you in. And, those visuals are very, very lovely, particularly those little kids in there. That's a dream that people dream for many, many years, to be there, to ring that bell. So give them a big hug, particularly from my end. But let's talk about numbers. 5,500 crores of capex comes on stream in 18 months. What is the asset turn? If you could help us out with that. What kind of revenue potential can you see in the next few years? Point number one. Point number two is you're using some part of the proceeds that you raised to repay debt. And I think that number is around 1,600 crores. What are the interest savings? Two numbers.
Right.
asset turn, and debt number.
Right.
Go ahead.
Absolutely. So, sir, as you have seen, the MV's fundamental business for the last so many years, we have had a strong profitability year on year. In fact, with a capacity of 6 gigawatt of module and 3.9 gigawatt of cell, which was commissioned only in September 2024, we had a profit of 390 crores. And with that, you can see our Q1 profits are at 18% EBITDA margins. At a 33% EBITDA margins, and that is the strength of the run up we are doing with the current expansion. So as we scale up our operations from areas, as we scale up our operations from 7.8 gigawatt of module and 2.9 gigawatt of cells to 16.3 gigawatt of module, that is the fold of increase in capacity, which is going to be backed by the revenue numbers. As you know, that I probably cannot take up the.
Okay. Let us do the hard work then. Let us do the hard work for investors. Suhas, at 7.8 gigawatts of solar module and 2.94 gigawatts of solar cell production, your revenue was close to 2,300 crores. Now this grows to 16 gigawatts of solar PV module and 9 gigawatts of solar cell production. Do you believe that your revenue at peak level can cross 5,000 crores? Is that a possibility?
So that absolutely sounds like about right, because you can see that more importantly, one is that is important. Also, it's important to understand that our integrated capacity is growing, not just the module capacity that is growing, and
Yes.
that is what is fundamentally required for this industry right now, and that is where, especially with ALMM2.
Right.
These two coming
Suhas,
into place.
Suhas?
It is basically the necessity of the.
Yes. So we're getting a few numbers out of the way. One is revenue potential goes to 5,000 crores. Very good. That's a tick mark out there. Second point you made, very important. You're getting more backward integrated. So you'll be consuming higher amount of raw material in-house. What does it mean for margins? What is the margin band we can work with? And then I have another point, but let's get done with this.
Yes. So to give you an idea on that, you can see that in FY24, we had about 12% EBITDA. And with backward integration, half year of operation in 2020, in FY25, we did about 33% of EBITDA. So that can give you a fair idea of what the backward integration is doing and the result of that backward integration in our numbers.
All right.
And how much of that is already realized? Can the margins go to around 35% when the revenue is 5,000 crores?
No, we continue to hope to do at the levels that we are at right now, and that would be the endeavor.
Happy with current margins and debt? You paid 1,600 crores. What is the current debt in the books?
Debt in the book right now, all the outstanding debt is going to be repaid through this issue.
You'll become debt free.
The new debt that is going to come on the balance sheet is going to yes.
All right, the new debt comes in around 3,300 crores. What we'll do is we'll have a conversation with you once you are out with your quarterly numbers. So then you'll be at a little more ease to give us some more outlook into what the business looks like. But for now, we'll be happy with 5,000 crore revenue potential with margins around that 33% as well. With that, take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us here on Chartbusters.
Welcome back. Well, as you can see, the Nifty Bank is almost moving into the green. I think we just need to refresh that in just a bit. As we speak, the Nifty Bank has moved into the green, and that's the reason the markets actually have recovered a little bit. The Nifty is back over the 25,900 odd mark. The breadth of the market is still in favor of the number of stocks declining, but that will refresh, as we wrap up on Chartbusters. When you come back on Trading Arm, hopefully the Nifty Bank will continue to remain in the green as we speak. That one, it just requires a bit of a refresh. So let's slip into the break, come back. By that time, we'll have a refreshed Nifty Bank rate, and we'll have the team of Trading Hour as well.